Good morning, everyone, and welcome to the weekend update. What a crazy week we just had. And, you know, it's not like we did not expect this to come. I've been warning about it in the last several videos. We've been positioned high in cash. The analogy I've been using, we were at a great party, free booze, free music, but we were dancing next to the door because we knew the cops were coming. And this past week, boy, did the cops come. And the first chart we're looking at is the reason and the excuse that they used to go after most stocks last week. Well, one of them at least. This is a picture of the 10-year treasury, and this is the excuse they used. I've notated a couple of points here. When we came in at the start of the year, we were under 1%. On Friday, at one point, we hit 1.62. Really, just this past week, it ended up going up about 40%, and that quick shock to the system, rates going up tend to be bad for the speculative part of the market, namely tech stocks, the high flyers with the big multiples, because you're able to use the lower interest rate as an excuse for higher market caps on these kinds of stocks. So this big move we saw this past week, a large part of that reason was, of course, shorts. You hear everything about retail this, retail that, all the crap that happens in the market. Short interest and shorting is a big component of it. They tied or went after bonds this past week. Repo market was negative at one point, just showing you how much short interest has gone into bonds with the little gaming that they do. Probably over a lot of your guys' head, but just to say, Powell came out on Thursday. We were hoping, he actually said everything we really wanted to, except that he wasn't concerned about rates, and they used that as an excuse to go after stocks and to push yields higher. I would say it seems like they're kind of tagging 175 to 2%, but they want it slowly. You can see here, since into the election last year, interest rates have just slowly gone higher. It's these big spikes up that the market doesn't like. So hopefully this upcoming week, we're going to see things come back a little bit. There was a big rally back on Friday. I actually left early, forced myself to leave early. I don't like to buy big rallies on Fridays, especially when we have the kind of noise that's out there. Currently sitting 87%. Like I've said, we've been high cash, and that of course includes all the pre-deal SPACs, which I consider quotation marks cash. You know that list right there. Most guys, if you've been listening over the last couple of weeks or you lived through the August sell-off, this was a breeze. This was a chill and relax market. If you are not relaxed and chilled, if you're not sitting out there and looking at the action with a big smile on your face, knowing that once this noise, once this storm passed, there's going to be so many plays that we've played already that are resetting on our chart that we're going to get to play again. So I love these kinds of retraces. Remember, there was a point a couple of weeks ago where we had no stocks briefly under $1. I've been trading for 20 plus years. That is the first time that ever happened. Another comment on the market. Actually, let's look at the Dow chart here. This is the Dow chart. Dow chart looks normal. What really happened? A little bit of a hiccup, and that's because the money was rushing out of 90% of the stocks and running into those 4 or 5 sleepy, boring Dow stocks. Now, everything got hit over the head on Friday, but then ended up rebounding nicely. Things just got a little bit out of hand. This chart, still in a nice uptrend. It's the QQQ, the tech stocks, that just got whooped. Tech stocks gave a big bounce on Friday. We are deeply oversold. As you can see here, MACD is as low as it can possibly go. Stochastics in the basement here, but 200-day moving average is still another 10% lower. So there is risk here if they continue to go after the 10-year bond. So it's going to be an interesting week. We had some big bounces all over the place out there. I'm not going to go over a whole lot of charts on this video. I'm going to go over some large cap stocks, and I'm going to go over some of our larger swings, but most charts got their nuts kicked in this past week. The way this market is right now, this is a day trade market. As I mentioned on Wednesday, Thursday, Friday, this is not a market to be adding to long-term or swing plays, even though it is very tempting, and even though these stocks may run all the way back up. This is not the kind of environment where you press those stocks. We have not seen a real decimation in stocks, and that possibility is still out there. If it's not, so what? There'll always be more trades. Right now, the number one goal of most traders is capital protection. If you don't hold on to your cash, you can't make a living. So just sit back. Let's see what happens. We're going to go over some charts and see where we set up. AI, like every other tech stock, just got whooped. This is the 1 hour chart. They got this down to 77 bucks on Friday. Big bounce back. But if we look at the daily chart, it's still, like most of these tech stocks, trapped in a bullish wedge right here. Needs to get over 105. Possible upside to the 20-day at 120. Now, an easy way, the 20-day EMA, that's this green line you'll see on all the charts that I do. This is my favorite moving average indicator, and one of the easiest ways to determine a bounce on a stock. If you look at most stocks, this moving averages, whenever a stock goes above it or below it, it always ends up bouncing back to that level. So when you see extreme divergences, when they're really, really down below that 20-day, that gives you good comfort that there should be a nice, solid bounce back near term to that moving average. So I'd be looking for a 105 break, probably a move back to 120, and go from there. Tesla, again, this is another stock we keep an eye on for an overall idea on the health of the market. Snow is another one that I like to watch as well. So the movement in these three stocks kind of gives me an idea of how the speculative money is flowing around there. Tesla, nice big bounce back on Friday, but it's at the top of its channel. We've got an interesting thing. Who knows what tomorrow is going to bring? Is it going to be one of those huge gap up moves where everything gaps up and there's no real trades, or are we going to see some selling? Don't know. We're high cash. We'll just see what the market brings. Now, a lot of guys I know probably loaded up on that rally late Friday looking for a big pop Monday. It may very well come, but if it doesn't come, all those guys who loaded up on Friday are going to get rushed out the door again. I made a lot of comments in the chat room on Friday. One of the big reasons we've been sitting back, very, very suspicious behavior in a lot of stocks. The amount of drops and the size of the drops out there has really been ridiculous over the last few days. A lot of shorting out there, a lot of bid pulling by the algos, and you get small pops and then the bids disappear, small market sells, and then these stocks look like they're imploding even though the volume is much lower than there is. The correlation between small stocks and the action in the indices like the SPY, I've never seen it tied like it has been for the last week or two. Very, very bizarre action out there. It almost seems like it's done to run the retail guys out of the market because they're the market sellers, and it seems like the action right now that we've been seeing in the last few days has been to drive and scare a lot of these new traders out. Big losses being posted by a lot of people out there. Losing big money is not a badge of honor. It's a badge of stupidity, especially if you don't learn. You should be sitting on high cash. This market, we knew this kind of retrace was going to be coming. We've been sitting back. We've been doing nothing. The next few days, day trade market. When it's time to change that stance, I'll change it. You'll know when I change it. I would also say, do not be tempted to play like you were playing last month. This is a half position market right now. So this is a probe and see what kind of action we have at least in the next few days. Now, some charts I'm going to go over real quickly. Some of the larger swings I have right now. UAMY, nice little bounce back on this one. It held the $1 level really, really well. We'll hopefully get an update on our Ambry deal here really, really soon. It is overdue. Now, last week we didn't want these companies to put out press release. The way the market is right now, we could see these stocks popping back 20, 30, 40% on very low volume. The way these stocks, many of these stocks fell last week, they're probably going to bounce back just as quick. We're not going to catch them all. We'll catch some. We're not going to be chasing them. If we see a lot of stocks popping up big, we'll go look for the laggards. UAMY, here's the daily chart. Pulled back all the way to the 50-day moving average. So this would be very healthy for a bounce early this week. Again, MACD in the basement, so let's see. We're setting up nice for a pop. XPL, They present tomorrow. Hopefully we will get some sort of announcement regarding their EV battery. This is one of my favorite plays right now, XPL. This is the daily chart. Again, just like UAMY, pull back to the support line, gave a nice big bounce back on Friday. Deep oversold. It's not like the battery stocks are going anywhere right now. This was a forced retrace, much needed retrace on a lot of these stocks. Now that the stimulus plan, the COVID stimulus plan has been passed, they're going to be turning their attention to infrastructure and all these other priorities like electric charging, etc. So this is just the first inning in all of these stocks. SNCA is one I also want to mention too. SNCA merger value is $2.09, and at one point on Friday it was trading 50% discount. Nice bottom in place here. Near term, normal bounce back to that 150 area with the rest of the market. PRFX, these guys, again, now is the time for them to put out that FDA news on their trials. It fell really big in the last few days, but it stabilized nicely, which is why we jumped into this one late Friday when we saw that little rally in the market, because a lot of stocks had bounced big off the lows. This one was kind of sitting back there. MACD cross, any kind of news, we're looking at 7 to 8 on this stock. AEI, this stock had a nice little press release pre-market on Friday, was 21.22, 100% pop. If you did not sell some of your position on that pop, you need to slap yourself and ask, what the hell are you doing? If I told you on Thursday that you could sell some of your AEI on Friday at $22, you would have the biggest smile on your face. Yet, when that stock is $22 the next day, up 100%, a lot of new traders don't sell it. Well, it's going to $50. That's the long-term play. As you saw, we were able to buy this stock back at 11, sell at 21, rebuy it at 11, and still in that same position and looking great going forward. One thing I will say, we have a lot of targets out there. Targets are a tricky thing, especially when we keep hitting targets over and over and over and over again. One thing I would say, let's say we had a $10 target on a stock going into 2 weeks ago, and the stock has fallen off and it's now at 3. My revised targets now that I would be looking at for bounces on these stocks would be moves back to where they were. For example, if we were looking for a move to $2 plus on XPL, my near-term target now would be a move back to $1.25. Just to give you an idea how we treat targets after we have a big market rout like we saw in this past week. ITP is right at the top of its channel. Hopefully we'll get that China FDA news, and you know, the target on this one, I'd be happy with a move back towards $1 now on this stock. A lot of these small stocks that did multiple offerings are being shorted very heavily by these brokers right now, so it's probably going to take news to get them to get those moves back. Last stock I'm going to talk about real quickly is AYRO. Got smacked over the last 2 weeks. They actually got this one down to the 200-day moving average on Friday before the bounce back. This one looks very solid, especially if we see a bounce with Tesla. It's not too far away, but a break over 575-ish to 6, and we could be looking for a push back to 7 on this stock. So just because I didn't talk about a stock today does not mean we're still not in it. I updated the swing list there on Friday. Lots of SPACs, still have positions in all our other swings. We're going to see what the market brings on Monday and Tuesday. That is the easiest way to trade this market. High cash, see what the market brings us. So that's it for the video, guys. Have an awesome weekend, and I will see you all in the chat room tomorrow. Bye.